Hold on. Okay, so I wanted to share this information regarding investing, and I have noticed that a lot of people maybe they are not aware of it when it comes to Robinhood. So there is something very concerning uh, when it comes to investing on Robinhood IPO. So this is IPO, meaning initial public offering. So these companies that you see on the screen, they have just launched their IPO on Wall Street. So for those who do not understand what IPO is, it means when a company uh, go public. So basically, go public in order for the people to buy shares. So basically, people will be part of your company and they will part of investing. So they will be considered as investors. Okay, so let's look at those IPOs. So these companies they have just launched, and let's go with the first one. Okay, if you could click the first one. So the first one it says here 43,222 Robinhood customers invested in this IPO. So when the price was $51, okay, people invested almost 43,000 people, customers of Robinhood, invested invested in the company at the price of $51. So keep in mind, a lot of people who use Robinhood are just regular folks. You know, the people who do not have a lot of money. That's why. Uh, I mean, the majority of it, right? The majority of those people are are making very paycheck to paycheck, basically. So they are not rich people. And at this point, so when they purchased the IPO at 51 per share, and right now the price is 66. So in this one, if you purchase at 51 and you hold it for you hold it till this number. I mean this. Yeah, I'm sorry. You hold it just till today. So you actually, you're able to make something. So let's go to the next one. The next one is Instacar. The Instacar IPO. So Robinhood customer, 40,000 people, customer from Robinhood invested in Instacar when the share was $30 per share. And right now, the current price is $22. So they have basically lost, that's a loss, okay? And I don't know, maybe, I mean, it's not a big loss because just $7, $7.80. Uh, there is a chance that this this company will go up based on on their performance. So there's still hope in here. So let's try the next one. The next one is 70. Oh yeah, I want 70,000 Robinhood customers invested in new. All right, when the IPO was $9 per share, and right now is $8.52. That's not bad. Okay, that's not bad at all. So keep in mind, the stocks they tend to go up and down. But what I want to say is you have to be careful. If the stock some of the stocks are very cheap, meaning nobody want to buy them. You don't want to go to buy stock that nobody wants to buy. So you want to invest in the stock that they have the potential to grow, right? So especially penny stocks. There are, I think, a lot of people they are not aware of it, but on Robinhood there are a lot of penny stocks. So you have to be careful of those penny stocks. Okay. All right. Let's go to the next one. This one is so the stocks were Robinhood customers, 50,000 customers almost, and they purchased the stocks at $28 per share. and right now the price is $6. So that's a huge loss. So basically, you have to wait, I don't know, several years before uh, this price goes up and to go back to the initial price. So in this case, Robinhood customer, they lost, and it looks like the big guys won, right? So let's go to the next one. The next one is Braze. Okay, the Braze 20,323 Robinhood customers invested in the first initial IPO. Okay, and the IPO at $65 per share, and right now is $47. So in this, so the price went $17 less as of right now. Okay. So let's see. This one is the price was $13. So this is Vaccinity, and 42,000, almost 43,000 Robinhood customers invested in this IPO when the price was $13 per share, and currently the price is less than $1. So that's a huge loss, right? And it will take. So you have to be careful, especially when they just launched the IPO. When they just when they launched the IPO, you have to keep in mind that there are a lot of big companies. They have a lot of money, and they have billions of dollars. They invest those money, and you as a Robinhood client, a user, you don't, you're just a regular guy and you don't have enough money. You cannot compete with those people. Okay, so the idea that you have to just buy it, buy the stock when they just launch is a very risky proposition, because in order for you to be able to get out at the same time the other guys get out, otherwise you have to have the type of a strategy. Otherwise, it's going to be really hard, because what they usually do is when they start go public and they buy it, and then because a lot of people are buying it, the price goes up. Then suddenly they pull back, they take their their profits, and the stocks is completely devastated. So you have to keep in mind it's very risky business, especially if you are in Robinhood. You want to make sure you have to go with the companies that are steady. So instead of buying when the company launch, you just wait a few months until the dust settle. Then you'll be able to really know the value, the real value of the company. Because most of the time, when the company is launched, the value is inflated, and it's not the real value because there's a lot of hype that's going on, right? So you have to be able to wait and see if that company really a valuable company, because for the long run you will be able to tell what that company is investable or not. But from the start, it's usually the price is very inflated, so you got to keep in mind. And then let's try another one. This is the bird. Okay, all birds. So all birds, about 33 Robinhood customers invested when the price was $15, and right now the price is $1. So that means the value $15 was completely inflated, and you just purchased the hype, and right now you lost money. All right. So okay, so it's a 92% down. That's a lot. So okay, let's go to this one. This one is Expensify. Almost 22,000 Robinhood customers invested, and the price was $27 per share. Right now it's $2. So this is a complete loss. Okay. And let's see if there's another one. Okay, let's go to this one, Coco. the Vita Coco company. So almost 68,000 Robinhood customer invested when the price was $15 per share. Oh, this one is really good because they're able to make money. So this one is $24. Okay. So if you invested at $15 per share, right now it's 25, almost 25. That's good. So from all these companies, you can see the percentage of those who are down, like 71% down, 30% down, 78%, 68% down. That's a lot. 78% down, 72%, 76%, 98%. So there are some exceptions, but the exceptions are very few. You see? So so my concern is it looks like a lot of the Robinhood customers are being taken for a ride, and because they are not taking into consideration the impact of the big companies that they have. But these companies change the price in a second. So if you have just a couple of $100 or a couple of $1,000, you have to go for the companies that are steady. Okay, you wait for the you wait out until you see the real value of the company before you can even invest. And so in this market, especially go with the flow, because go with the flow because this is how the market works. Okay, if everybody is buying Apple, you should go and buy Apple. You cannot go buy a company that's completely unknown, right? If the market is moving in one way, okay, you should move that way until you can cut it out or can take a profit, right? So if you take Apple, if you take Amazon or Google, these are steady companies. So you wanted to stay with the steady companies, and then in the long run, you'll be able to make money. Okay, so it's really important because you cannot afford losing money, and those companies can afford losing money, a lot of money. So you are, as a retail investor, as they call people that who use Robinhood, retail investors, you need to be very careful. You go with the flow, meaning buy the companies that are stable, they have real value. Okay, so you cannot afford gambling at this point, right? So be careful of that. So these are my few thoughts. If you have any different perspective, yeah, you can, you can post it below.